tomorrow morning. I want to bring in Mainstay Capital Management Chief Investment Strategist David Kudla. David, it's always great to talk with you. And look, what message is the bond market sending, do you think, right now?
Hey, hello again, Cheryl, and good afternoon. The bond market, I think it's really sending a message that it's that reckoning that we've all been waiting for with record deficits, record debt crossing 40 billion. The market is starting to care. And foreign investors, domestic investors, institutions, it's starting to care. That's what's happening with the 10 to 30-year bonds rising in yield. What is the bond market telling us? I think it's telling us to invest in commodities, which is a sector we've talked about before, and we think it's very opportunistic right now.
No, certainly. And look, we're watching the bond market, and again, that 10-year, a little bit of a fall today on those yields, but certainly that data coming out tomorrow morning at 8:30 a.m. Eastern time, that's the PCE price index. That inflation story could change not just the markets, but obviously more conversation about what the Fed's going to do September, December. Now, let's talk about Nvidia, because they are reporting earnings. That's after the bell tomorrow. So what are you expecting to hear from the company? Many analysts have come on the network and on this program and said that it's not that they need to beat. They need to beat in a big way. Your thoughts?
Yeah, I'd agree with that 100%. We know we're looking at our forecast is for doubling of earnings year over year over 2025 second quarter. They're going to have to do better than that because that's the expectations of most of the street. They have, with Rubin coming on, with the success of Blackwell, everything that's going on, they're still at the center of the AI space. And the demand is going to be there. I think that there's concern about this circular financing and so forth. But as we look forward, we are big believers in AI and what developments will come. It's the skeptics that I think have held back both the hyperscalers and the what we call the picks and shovels and Nvidia, the tools this year with fits and starts. But we expect great things out of Nvidia still. We're long the stock. It's one of the top holdings in our portfolio still.
Well, let's talk about AI in general and this doom loop. It continues to accelerate. There's growing concerns on the street that Nvidia's rising financial obligations are going to be an impact, not just for the quarter, but future growth. How do you see that impacting earnings? And overall, in general, is Nvidia a buy right here? Or will it be a buy if it pulls back a little bit?
Yeah. First, on the second question, we think that if it's certainly a hold here for those that have plenty of Nvidia, like us, full disclosure. And I think for those that don't, it should really be in every growth portfolio right now. It should be in every growth portfolio. If you don't have it, you should own it. And we think that that's true going forward. The concern is valid. This AI doom loop with the circular financing I referred to earlier, that really, Nvidia is kind of at the center of that, and it's leveraging them even more in the space. So if AI doesn't, this is not our base model, right? But let's say AI doesn't pan out. We don't get the developments we expect. We don't get the end users that we expect. And that leverage starts to work in the opposite direction. That could be very bad for Nvidia. So is that a valid risk, a valid concern? It sure is.
All right, let's talk about this. There's this new report out today. It's exclusively in the Wall Street Journal. They're saying that Anthropic is expected to tell investors it sees over $30 trillion in potential revenue. It's easy for companies to put numbers out ahead of their IPOs, but what do you expect to see once this company goes public? And this incredible message, this would make them bigger than SpaceX, to be clear here.
Yeah, this is an incredible announcement, an incredible forecast. This one, I'll say, yet to be seen. As a private company, we don't know as much. We don't have as much insight to the company as a public company. But as it becomes public, we will. We'll have more insight, be able to do more analysis, have more information to act upon. But really, anyone in the AI space, we really don't know how far this will go. We really don't know how far AI will expand. We don't know what we don't know yet. And so it may sound like a very lofty forecast, but we may be amazed by what some of these companies realize in terms of shareholder value, shareholder gains in these out years.
Oh, wow. Well, let's talk about the markets in general right now. Which areas of the market do you see benefiting from these current levels? You know, there's been a lot of conversation about maybe we're going to have a pullback in September, October timeframe. You know, pullbacks are buying opportunities, to be clear. But what do you think is going to happen over the next few weeks?
So we're obviously still long the AI trade. Some of the ETFs we've talked about on the show before, AIS, Chat, War, that are all picks and shovels in the space, as well as some hyperscalers in there in those ETFs. But what we really like right here, Cheryl, is commodities. We've seen what's happened, and it's really a function of what Treasury Secretary Scott Bessent is doing on the long end of the curve with the operations going from $2 billion to $4 billion. Now he's saying we have $1 trillion that they can work with in their general account. They're kind of stepping in and doing what they'd like to see the Fed doing, we believe. And so that shows, I think, really more their desperation. So how do we protect ourselves? We protect ourselves with commodities. We've seen gold and silver, what they've done. Energy, one of the ETFs we like a lot. We've talked about it on the show just back in May, is HGER, and it's just a broad basket of commodities, but it centers on about a third in gold, a third in oil, a third in soft commodities, all of which have been on a tear over the past couple of months. And year to date, more than doubling the performance of the S&P 500. So we get a great return. We get diversification with our AI stocks in the portfolio and other elements of the portfolio, and we think it's a very good place to have a good allocation right now.